Alright, welcome to Talkin Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about the Bitcoin miners. I have a bunch of new charts that I have not shown before on the channel, so stay tuned. We will make chapters below if you want to jump ahead, but I recommend watching all of the charts. If you're new to the channel, please remember to subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot, and I appreciate it. Lastly, you can become a member by hitting the join button on the YouTube page. If you don't see the join button, you can hit the link below. Members get some member-only content. In addition to that, we do a members-only live stream once a week. So what we're looking for is red flags on these Bitcoin miners. Obviously, this is all a function of the fact that CORZ just had a catastrophic failure. And the number one question that I'm getting is, who's next? I'm trying to show you guys my due diligence process, or at least parts of it, as to how I'm looking for companies that may be distressed. Because it is not always obvious. Just looking at the charts or the stock price doesn't always tell the story. There's an awful lot of information for each one of these companies. Every single one of these Bitcoin mining companies has taken a different philosophy on how to grow their business. So you really do need to understand what's going on. So hopefully these charts will help shed some light onto that. Okay, so the very first chart I want to go through is what's called the current ratio, current assets versus current liabilities. Now, for all of these companies, I'm using the June 30th financial statements. A few of these companies have had significant changes since then. So I've put a star on each one of these charts next to Stronghold stock ticker SDIG and Mawson stock ticker MIGI. Those two in particular have had major restructurings of their business. So those require a deeper dive. This ratio varies massively. So you're going to see some companies by this ratio would appear to be extremely strong, and some would appear to be in great distress. So let's go through it. I'm going to start on the bottom. Obviously, the ones in red are in trouble. For instance, I'm going to take TeraWulf. Their current ratio is 0.2. They have 20% as much current assets as they do current liability. You know, two of the three that are in the red, they have already had to sell off big chunks of their assets in order to stay alive. The one that has not done anything yet is TeraWulf. So that is a red flag. So this is exactly what I'm looking for. I'm actually looking for two things as I go through these. I'm looking for red flags for companies that could be distressed and could be in danger of going out of business. But I'm also looking for opportunities. I'm looking for companies where maybe there's some hidden strength inside of these charts that the market has not priced in yet because they're not seeing it, you know, due to the massive amount of fear and the fact that really the entire Bitcoin mining sector, all of the Bitcoin mining equity stocks, have been drained massively. Core Scientific and GREE are just about 1-to-1, which means they have just about the same amount of current assets as they have current liabilities. That's not a great position to be in. So for instance, if I was to go to GREE, they're at 0.9, so they have slightly more current liabilities than they do current assets. So I'm going to go to this chart that we looked at in yesterday's video. This is the long-term debt comparison. So obviously we have two companies that have massive long-term debt, both structured very differently. You're going to see GREE is number 3 on this list. They have the third most long-term debt out of every company. So when you take those two factors together, and then you look at their current ratio, and you see that that's a little bit under distress, right? That is 0.9. They have a little less current assets than current liabilities. So there's some things starting to mount up for GREE that are concerning. So by the time I'm done with all these charts, you know, that's the analysis that I do. So now to me, I just moved that over into a column where I'm a little bit worried. That doesn't mean I've eliminated them. There's a lot of other things to look at, but we have a yellow flag here. I think we have a yellow flag on the amount of debt that they have. So things are starting to mount up on GREE. Okay, unfortunately, TeraWulf is the next one in line. They're just after GREE. They have $85 million in long-term debt. So this is a situation that's even more grave than the GREE situation, because at least GREE was very close to 1-to-1 on their current ratio. So, you know, they're still paying their bills. They're sitting with a current ratio deep into the red here at 0.2. So to me, those are two factors now where I'm concerned. So definitely, I now have TeraWulf in a pile where I got to do a deep dive and see, is there something that mitigates these factors, or am I going to keep running into red flags with TeraWulf? So then I have a bunch in the blue. So those are reasonably healthy, but they're not super strong. So I put those in blue. They're not a red flag yet, but they're certainly not something that I'm putting in the win column. Then obviously we have a bunch of companies in the green. These are companies with very healthy current ratios. So 3-to-1 is a good current ratio. You know, by the time you get to Riot, you're at almost 5-to-1. Hut's at over 10-to-1. Any is at 12-to-1. And Bit Digital's at 19-to-1. So this is another good lesson. With these current ratios, this would seem to indicate they're in no danger of having a liquidity problem at all anytime soon. But that doesn't necessarily mean they're a good investment. They may be one of the safer investments, but we need to look at all the other factors to see if they're a good investment. This is a chart measuring the amount of intangible assets and or goodwill on each company's balance sheet. When I show you the next chart, you're going to see why I do this. The thing about goodwill and intangible assets are they may be properly accounting for them on their balance sheet, but they do not represent liquidity, right? You cannot turn goodwill into liquidity. In addition to that, you really can't use it as a tangible asset to borrow against either. So when you're looking at a company's equity, if it has a massive amount of intangible assets in there, then that deeply impedes their ability to raise capital either through equity or debt. So this is a number that's important only when it's spiraling out of control. You're going to see for most of these companies, it's almost a non-factor. Many of these companies have already written down or completely written off all of their intangible assets and goodwill. Other than the last two companies, even GREE is at 5.6%, so that is not a big percent of their total equity of their company. From Bitfarms on down, we're at somewhere between 0.2% and 0%. So, those all basically round down to zero. So most of these companies do not have a problem with intangible assets and goodwill sitting on their balance sheet, kind of propping up their balance sheet, if you will, from my perspective. So there's two worth talking about. Any does have 23% of their equity is intangible assets and goodwill. So that's a significant number. So it's not a deal breaker, but again, I've made this yellow because that is a yellow flag. This is a chart that was a lot more valuable a week ago before CORZ Scientific announced the fact that they're illiquid than it is today. But it does go to show that's why I look at these charts. CORZ Scientific, almost 65% of their equity is in intangible assets. You can't go to a bank and borrow money and collateralize your intangible assets. CORZ Scientific does show up as a red flag on the vast majority of these charts that we're going to look at. So we already know about CORZ Scientific. The question is what else pops out from these charts? Okay, so from that chart, I call this net equity. So this is equity net of intangible assets or goodwill. Again, this is as of June 30th, and this chart is in the millions. I discount the intangible assets. Now, some of you may disagree with that, and in certain industries, the intangible assets are their most valuable assets of all. In the Bitcoin mining industry, that is not the case. Riot has by far and away the highest equity, or book value, if you will. Essentially, this is adjusted book value. So they're at $1.2 billion of adjusted book value. Marathon is the second closest at $659 million in book value. Riot is by far the largest book value. However, Marathon has a larger market cap. So when we get to price book, you're going to see these ratios are very different. But this is a step I need to take in order to make that analysis. So this is basically price book. This is a ratio of a company's equity versus their market cap. So, and again, for my purposes, I have used the net book value, the net equity. I've eliminated the intangible assets. So when we look at it from this point, you're going to see that there's a massive difference between a lot of these companies. So there could be potential concerns at either side. It's just an important number to understand. Marathon right now is trading at 2.5 times book value. That is significantly, it's more than double the next closest company. So that is one that I would want to look into. That is a gigantic outlier. At the other end, you're going to see some very, very low numbers. So there's two things going on at these low numbers. And honestly, most of this list is very low. Stronghold was at 0.2 right now, but they did have to reorganize their entire company. They sold most of their Bitcoin mining machines. They actually exchanged them in exchange for a reduction of the debt that they could not afford to pay. So there's a fundamental shift in their business. So there's a reason for that. And again, we talked about Mawson. They had to sell off one of their main facilities in order to provide the liquidity to continue going on as a company. Any rate here at 0.2. So that one's of interest to me. I don't know a red flag off the top of my head. In fact, the last chart we looked at showed they have an awful lot of liquidity. So now I'm starting to look at trading at half of your book value is not good. Most companies trade at multiples of their book value. But you'll see the Bitcoin mining sector, as we know, has been beaten down drastically. So all these numbers are very low. Okay, so that's 4 new charts that I don't think we've ever gone through on the channel before. I have a bunch more. I will be putting out more videos. The end of all of this, I am going to put out a video of the 5 companies that I think are the most distressed out of all of the Bitcoin mining companies, because I know really that's the information that everybody wants. But I'm hoping by the time I get to that list later this week, you guys will have your own list of what what you think are the top 5 most distressed companies that may be in danger of running out of liquidity and potentially going bankrupt. So that's what this is all leading up to. Hopefully these are useful pieces of the puzzle to you and you enjoyed this video. Please remember to subscribe to the channel and hit the notification bell. Thanks so much for watching, and I will see you in the next video.